In today's video, I'm going to be talking about indirect taxes. An indirect tax is a tax levied on goods and services rather than income. So an example of a common indirect tax is your GST that you pay whenever you buy a good or service. And an example of a direct tax would be an income tax, or a corporate tax, or a property tax. Now, there are two types of indirect taxes, and the first one is a specific tax. A specific tax is a specific, fixed amount of tax that is imposed on a product. And an example of this would be a specific tax of $2 per unit of good. So, say for example you're buying a good for $10 and you have a specific tax of $2 imposed on that unit of good, your total value that you have to pay would be $12. And for every time that you buy a unit of good, let's say you buy 3 of them, your overall tax that you have to pay over and above the cost of the actual product would be $6. Let's illustrate this on a graph. Here we have the market for shoes, and if you recall from my previous videos of market equilibrium, the market equilibrium price is when the supply and demand curve intersect, which is here, which would mean that our equilibrium quantity is 7 pairs of shoes and our equilibrium price is $5. Now, when imposing for example, an indirect tax of $2 per unit of good, you move the supply curve to the left by $2, which would give us a new supply curve here, and we label it S plus tax. This would give us a new equilibrium point here, and our new equilibrium price would be $7, and our new equilibrium quantity is 5 pairs of shoes. Now, the second type of indirect tax is a percentage tax, which is a tax that is a percentage of the selling price imposed on a product. So, an example of this, if we're again buying a good for $10 and our percentage tax is 20% per unit of good, the extra value that you would have to pay over and above the market price is $2. But if you were buying 2 units of good and you were paying $20, your new tax value would be $4 extra. Let's illustrate this on a graph. Here again we have the market for shoes, and when we were having a specific tax, our graphs look like this. But when you have a percentage tax, you have to move this supply curve to the left and upwards. Now, when we impose a tax and we are drawing a graph such as this one, you may have to also take into account the elasticity of demand, as this affects the amount of tax burden falling on the producers and the consumers. So let's talk about the effect of elasticity of demand on tax burden. Here we have a graph showing a perfectly unit elastic demand. It's neither elastic nor inelastic. Thus, the tax burden is equal between the producer and the consumer. But if we take another graph, such as this one, here we can see that the demand is highly inelastic, which would mean that much of the tax burden falls on the consumer. And the reason for this, you would recall, is actually I explained in my elasticity video. When you have a demand curve that is highly inelastic, an increase in price results in a proportionately lower decrease in demand. Therefore, producers can afford to increase the consumer tax burden, as they would not suffer much of a loss in demand. However, if your graph looks like this, here we can see that the demand curve is actually extremely elastic, and therefore, much of the tax burden is on the producer. The reason for this is because an increase in the price of a good when the demand is elastic would result in a proportionately greater decrease in demand. And in order to ensure that the producers don't run into losses or their business is not greatly affected, producers take much of the tax burden. Now you may also be asked to illustrate the government revenue box when drawing a diagram, and it's really simple. It is just the box of the producer tax burden plus the consumer tax burden, which is in total the government revenue. So here it is this box plus this box, which in total gives us the government revenue. Thank you so much for watching! In my next video, I'm going to be talking about subsidies, so stay tuned, and please do leave a like, subscribe, turn on your notifications, and if you have any questions, drop them in the comments below. Bye!